I think the central banks, they're going to have to start loosening policy very soon because all the rate hikes we've had, even though they've paused it, a lot of times it takes 12 to 18 months for that to come across. And I think we're going to start seeing the effects of it on the economy very soon. And I think that's what gold's telling us. And I think silver is going to catch up, as I said.
In his recent testimony before Congress, Federal Reserve Chair Jerome Powell reiterated the likelihood of policy easing being appropriate at some point this year. However, persistent inflationary pressures and a resilient labor market may delay early rate cuts. Renowned investor Mario Innecco anticipates that central banks will soon need to loosen monetary policy due to the cumulative effects of previous rate hikes. He suggests that gold's current performance may signal impending economic challenges and the necessity for accommodative monetary measures. The record-breaking streak in gold prices persisted throughout the week, fueled by mounting expectations of a rate cut by the U.S. Federal Reserve following Jerome Powell's congressional testimony. Spot gold prices reached a new pinnacle on Friday, briefly surpassing the $2,200 mark. According to the CME Group's FedWatch tool, nearly 70% of U.S. investors anticipate the Federal Reserve commencing interest rate cuts in June, a notable increase from 58% just a week ago. In a research note, Citi underscored that uncertainty may continue to bolster gold prices. At the same time, analysts at Berenberg suggested that a potential victory by Donald Trump in the U.S. presidential election would further enhance gold's prospects. Innecco highlights significant gold demand from non-Western countries, particularly China and other BRICS nations, showcasing record gold purchases by these countries since 2022. This underscores strong global demand for gold, particularly from regions seeking to diversify their holdings with hard assets, especially in light of strained relations with the United States. Over the past 6 months, China, Germany, and Turkey have predominantly embraced this diversification strategy, emphasizing their pursuit of gold to bolster their holdings. This strategy is crucial for countries with strained diplomatic ties with the United States. Join us as we explore Mario Innecco's insights. Stay updated by subscribing to our channel and activating notifications. Thank you.
I think it's just that there's overwhelming demand from the rest of the world, non-Western world. And by that, I mean China and other BRICS countries. They've been buying a lot of gold in record fashion since 2022. And I think a lot of the big money as well in the West are starting to buy physical gold. Retail has kind of slowed down. Retail has been lured by Bitcoin and cryptos and Nvidia, the Magnificent Seven. And they've totally, especially silver's hated and not even talked about. The other reason why gold is doing well, and I mentioned the State of the Union address. I'm not into politics, but I listened to it, I think yesterday. I had a bit of time, and I think it's just crazy what that guy said in that State of the Union address. I think all the values of private property, the rule of law in the US, not just in the US, but here in the UK as well, the whole of Western Europe is in danger. So when you can't trust the government, and you get people like Biden spouting so much garbage and lies, I can understand why people that have a lot of money are concerned. And holding dollars, fiat dollars, is like financing that kind of attitude by the government. And the other thing is, well, people are waking up to the fact that the national debt is increasing by $1 trillion every 100 days, which is crazy. I think it took like just over 200 years to reach $1 trillion, the national debt. I think it was reached somewhere in the early 80s. 100 days, you get $1 trillion. So I think that's why gold is going up. And eventually, Jim Sinclair used to say that the bankers will go long gold as well, even though they've suppressed it. They will go long, and I think we're near that. And yeah, and the other thing as well, I think central banks, they're going to have to start loosening policy very soon because all the rate hikes we've had, even though they've paused it, a lot of times it takes 12 to 18 months for that to come across. And I think we're going to start seeing the effects of it on the economy very soon. And I think that's what gold's telling us. And I think silver is going to catch up, as I said. A lot of you might be asking, oh, should I sell my gold and buy silver? Well, I've always been of the opinion that I don't know. I'd rather buy my silver by getting rid of fiat currency that I don't need. So I try to keep both.
Silver has recently outpaced gold in percentage gains, with the white metal experiencing a $1.17 per ounce increase, equivalent to a 5% rise compared to gold's 4.5% uptick. Despite this, silver is in a challenging position, stuck within a range it has traded in for the past 4 years. It currently sits approximately $5 per ounce below its 2020 peak and $25 below its all-time high. Traditionally, silver and gold have exhibited a tight correlation, but in recent years, silver has generally lagged behind its counterpart, falling short in the current bull market. Mario Innecco emphasizes the significance of the $26 per ounce level as a crucial resistance point for silver. Once breached, Innecco anticipates a swift upward movement towards the $30. Let's get back to the interview.
So what I think is going to happen, this is a teacup formation. As I said, I think this is why 26 is so important. We've got a bit of resistance here at 26. Right now, there's a bit of resistance at 24.50, which I mentioned last week. I think the high last week was 24, so let's see, 24 64. They've got it 54 here. I had 64. But yeah, and yeah, once we go through this 26 level here, 26, 26, 20, yeah, I think, yeah, we'll blow right through this 30. So what it looks like here, we had a move from March 2020. Where were we? Below $12, went almost straight up to 30. So we've had the consolidation now. So when we break this here, this downward trend line, and I think it's going to correspond to breaking 26 or thereabouts, we could see it move the same distance that it did here. So that's why, yeah, when we break 26, we could go pretty much straight up to around 50. And of course, there we might see a little bit of a fight. The bullion banks are going to be there. And that's the other thing I wanted to talk about, the bullion banks. People like that deny that there's any manipulation with paper. They say that the bullion banks have huge positions, but they're hedged, right? That they do the futures and the cash, but what's the point of that? And the amount of stuff they do is like years of production. What I think is happening now is that the Chinese are buying a lot, not just a lot of gold, but they're buying a lot of silver for industrial use. And there's going to come a time where the bullion banks are going to have to run for the hills. I also saw a video from Kinesis Money, and I don't work with Kinesis Money, but it was Andrew Maguire. He was saying that a lot of people are trying to take delivery of physical silver on COMEX. And of course, COMEX is not supposed to be a place where people take physical, and they don't like that. So I think we're getting close. That's why I think stacking and dollar cost averaging for the long term, and the attitude that you're not there to make money because silver is money, but to save, right? And to be independent of the banks. You don't have to put your silver in the banks. That's why I do it. And yes, I wish it was a lot higher, but I started here. So yes, you have to be patient. That's the thing. I think my thumbnail, I said, patience will be rewarded, and I think it will. So let's change this back.
In recent weeks, precious metal prices have surged, buoyed by increasing expectations of interest rate cuts in the United States. Gold, often regarded as a haven asset during periods of financial uncertainty, has experienced a notable rally, despite high interest rates and a relatively robust US dollar. Analysts have observed that gold tends to lead the charge in such scenarios, with its price shooting up initially. Subsequently, they anticipate silver to follow suit swiftly, with a rapid ascent. What are your thoughts about this? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.